Good morning, everyone. I'm Emma Steely, the CEO of AccountScore. We have spoken extensively over the last 2 years about open banking at Credit Summit, from the value it provides lenders when it comes to creditworthiness and affordability, to the rollout of the Financial Health Index and the how to deploy for organisations that were just looking to dip their toe in the water with it. Over the course of this turbulent year, we have seen a significant uptake in financial services providers utilising our open banking platform in order to get a full 360 view of the customer and their current financial standing. It has never been more critical. We have now seen more lenders adopting open banking than ever before, but the question has continued to be asked about mass market adoption and how, when a significant proportion of applicants come from the aggregators and lending platforms, how there can be a cohesive open banking journey that provides the best customer experience, gives the lenders the information they need, and ultimately delivers the best outcomes. Today, I'm delighted to be joined by Jake Ranson, Chief Commercial Officer of Freedom Finance, who is going to show how they are utilising open banking at Freedom to drive better outcomes for all. Jake, thanks so much for participating in Credit Festival with us today. The stage is all yours.
Thanks, Emma. So for those who aren't familiar with Freedom, Freedom is a lending platform which matches consumers to credit and does so under its own brand by taking customers from firms who wish to match their customers to credit or to lend off balance sheet, and is also a white label technology. The reason that open banking hit our radar very early on is because as a matchmaking service, as it were, between customers and the credit that they need or desire, is that credit data, traditional bureau data, doesn't work for everybody. And we are acutely aware of the fact that there are customers who have the capability to make the payments on credit cards and loans, what have you, who are unable to access affordable lines because of, more often than not, a lack of bureau data, that they're effectively thin file, and also that there are customers who fall outside of the line of sight of lenders because they're not able to identify them through their traditional credit data alone. So a lot has been said in relation to open banking about the value exchange. And for us, the value exchange is very much a two-sided equation. And we were acutely aware that we were taking on something big by trying to get open banking to the top of a multi-product eligibility journey for the first time. And that we needed to create two value exchanges, one with the customer themselves and the others with the lenders who needed to be able to decision on the data. So we took what's a very straightforward statement from the CMA back in 2016 as our North Star, which is that by setting up an open API alongside a proprietary API as one of their market remedies, they hope that firms would use that access to that data to innovate, and specifically to make products and services which succeed because they're useful to customers. So our first objective was, how could we be useful to the customer? And we did this through two mechanisms, really. The first is by creating a new consumer information service for consumers, and creating a score which really kind of demystifies eligibility, deconstructs eligibility. And it does this by transparently sharing all of the factors that a lender will use to adjudicate on whether or not they are a customer that they wish to acquire or not. And specifically by encompassing affordability as well as eligibility through the optic of willingness to pay as is available through that customer's credit data. And the second is on outcomes, and that by sharing their data by giving explicit consent to share data with lenders, that would become a currency, and that currency would unlock more offers, better pricing, or smoother journeys. And for some people, that could be very material in the difference between accessing an affordable line and getting no offers at all, or being restricted to higher cost options. On the lender side of the equation, everything that we've been doing so far could really be paraphrased as just making more data available. And each lender has had its own take on how it could use that data. But again, with that guiding principle that there are pockets of consumers with whom they could onboard and have a very mutually kind of value accretive relationship, but they're unable to identify them simply because of the absence of data in the credit report. So the value exchange with lenders is really by creating a kind of a robust consent framework around the sharing of that data, and then working with them to create new products, new journeys, and new outcomes. So the core component of that consumer information services part is a score that we built ourselves called the Fusion Score. And it's a very literal name, in that we've taken a feed from Equifax, the credit bureau who we use, a range of coded insights, which Emma and her team at AccountScore make available to us. We trained this model against literally millions of historic searches that have been completed on the Freedom platform, and used those outcomes to sort of train and hone the model. And the product of that is two scores. So there's a base score and a complete score. I'm sure we'll get onto how we have got consumers comfortable with sharing the data and the journeys that we've used in a moment in the Q&A. But at a basic level, the scores are split into base and complete, so that the consumer is given their basic score along with the results, and then given the option to boost that score and potentially boost their results if they wish, by giving explicit consent to share their data with lenders who may be able to make them an offer on the basis of those extra insights. So what we've aimed for, and what we feel we've delivered, is simplicity, explicability, and a journey that actually kind of cashes the check, as it were, insofar as that the data that a consumer consents to share can unlock better offers, better rates, or remove subsequent steps from journeys, making the path to accessing credit that bit smoother for certain customers. And I think it's also important to understand, who those customers are and who we serve. And within our development and R&D work, it was clear that within the groups of consumers who were excluded from affordable credit, or who tended to be excluded from affordable credit, there were some very distinct groups. The first, I've really just paraphrased here, as the young. So people who, through no fault of their own, just haven't had the time to build up a robust credit history. And their average credit score through our platform is 382. A very interesting group was establishing in the UK. So these are people who call the United Kingdom home. They're on the electoral roll here, but have under 3 years of CRA data and have a risk navigator score of 325. And then those who are rehabilitating. So have had some form of impairment in the past, and this might be due to maybe the dissolution of a marriage, or missing time off work for whatever reason. And so they have derogatory information on their credit file, but it's historic. It's over 2 years ago. So by taking the data that we now have access to via the collaboration with AccountScore, we've been able to kind of augment these customers' files with things like income, employment, stability, the fact that they're making regular rental payments, maybe non-standard income, etc., and make these available to lenders. And I think it's been quite an interesting time to be doing this. Our feeling coming in is that in stable economic environments, open banking would unlock better offers and drive growth. But in unstable economic environments, open banking, is proving to be a very common prerequisite to lending. And so, where lenders are having to manage an increased level of risk and uncertainty, the supply of credit has been constrained and remains constrained. And given that that's the case, we are seeing instances where freedom is being allocated a disproportionate share of that limited supply because lenders have been able to better understand and measure risk. So, it's been an interesting journey. I mean, I wouldn't claim we have all the answers at this point. We're still learning. Every week we get new insights about how customers are performing, about how to optimize journeys, new use cases coming out of conversations with lenders. But as you can see on the slide, we've had our first, snippets of feedback from real customers starting to go onto mediums like FIFO and Trustpilot to give us reviews and say that how much they've enjoyed using the service and that they've managed to source credit from us that they haven't been able to get elsewhere. So that's incredibly heartening. And we're looking forward to evolving this product and completing the journey over the coming weeks and months. Thank you.
That's great. Thank you so much, Jake. So before I get into the questions with you, I actually wanted to show the audience how the technology works. So, at AccountScore, we were certainly very aware of the need to make it simple for aggregators, lending platforms, and lenders alike to be able to parse and ingest the transaction data. So at the beginning of this year, we developed a tokenization system that made it possible in the simplest of ways. So when we have a client who is an aggregator or lending platform, it is our client that has the regulatory explicit consent from the consumer to access the open banking data via our account information service provider, Consents Online. The aggregator then receives the fully categorized data, which also gives them that ability to be able to pre-filter the data and ensure that the customer meets the lender's qualifying requirements. However, in addition to the data being shared, we also pass back a token to the aggregator. The aggregator must actually then request explicit consent from the consumer for the onward data share. Now, that is an AISP point and is not, that is a GDPR point and not an AISP point. But as soon as that consent is received, the token is then able to be passed to the lender. So the lenders are then able to hit the AccountScore's API, or if they're doing manual underwriting, able to hit the dashboard, and they'll receive the data back in the standardized way which they're used to which they're used to seeing it in. So whether it is purely for income verification, a specific data block, or all enriched categorized data for a full underwriting decision. The advantages of this are that the consumer only has to go through the open banking journey once, which is a significant improvement from a user experience perspective. And there is no need for the raw data to be passed, which reduces the latency on the decisioning and gives the lenders the ability to have that standardized approach to ingesting open banking data, just as they have with credit bureau data. So I guess as we look to answer the question on mass market adoption, we fundamentally believe it will be delivered by the innovative solutions that make it easy for the consumer, the aggregator, and the lender to share and ingest the vital transaction data analytics as the lending community continues to accelerate digital transformation with open banking. So thanks very much for that. And as promised, as I have Jake with us today, I also wanted to be able to ask him some additional questions about Freedom's open banking solution. So hopefully you're ready for this, Jake. Obviously you've already spoken to us about the Fusion score and Freedom's thought process behind it. But what has been the reaction from Freedom's lending partners about the Fusion score?
Positive, very positive. As I mentioned in the talk just now, volume of lending has been constrained due to COVID, and one of the things that we couldn't have envisaged when we set off with this product and putting in place this infrastructure was just how much of an imperative lenders would assume in order to take on extra insights to be able to lend. And one of the things, kind of an unintended consequence that's really helped with this was payment holidays. So lenders not being able to tell necessarily whether a consumer was up to date with the payments on their credit commitments or not, because of the very understandable stipulations that those customers who took up payment holidays could have their file frozen, as it were, for that period. So yes, we gained some very welcome early traction due to lenders using our open banking service to gain that optic into customers, which effectively enabled them to keep lending. So yes, it's obviously against a very regrettable backdrop, but has given us something of a stimulus.
Yeah, absolutely. I mean, as I said earlier as well, we've certainly seen that sort of acceleration in the digital transformation for that, because there's that need, isn't there now, to really have that up-to-date real-time view of the customer's circumstances. And as much as this year has been unlike any other, there are lenders still do want to be able to lend. That's what they do. And consumers, and not all consumers have actually struggled this year. There are also the consumers that are still looking good, and if they are applying for credit, should still be looked at. And I think that's one of the things that your solutions really started to be able to deliver, and it's great to see. So, in terms of, obviously, we're all aware of challenges in and around the lending market and with the pandemic, but what other challenges have there been that you've actually identified?
Well, certainly not unique to us, but I'd say that by far and away the biggest one is gaining consumer trust. So we've all been ingrained for years, not to show your bank transactions, not to share your sort of your login credentials, give any access to your bank account. And now, kind of the paradox of this proposition is we're asking people to give consent and grant access. So I think it's fair to say it's not for everybody, and we get better every day and every week as we do our research and we ask customers for feedback and we analyze and kind of sweat over the journeys to get as many people in as possible. And that will be a long and an ongoing challenge, I think, is actually gaining that consent and that outcome. But without giving away any sort of confidential information, we're very pleased with the take-up rates that we're managing to achieve. I think the critical thing is hinging it to an outcome, and for customers who are in market and actively seeking a line for whatever reason, as long as you frame that value proposition correctly and put it across in such a way as that there genuinely are outcomes that are only available if you do this, or better is a better word, better outcomes that are available if you go down this route. Then we are seeing a bit of almost a selection bias in that as well, and customers who believe that they have something extra that will help them in their transaction data are doing it, which is fantastic.
Yeah, absolutely. I think it's no surprise to anybody that, as you well know, I'm a big believer in the fact that actually, consumers don't necessarily need to know about open banking. For me, they're just, technical regulatory rails, and it is always about that value exchange. But yeah, completely appreciate the point that there are times when the consumer's going, well, hold on a minute. I've been told for years not to do this, and now I'm being told it's okay. So I think that for me is about, just like you say, time for those consumers to go, actually, this is the new way in which we are able to access the credit that we deserve at the rates that we deserve. And I think it's going to take obviously some time for that to really bed in. So you've said obviously there's been some resistance, but overall you're pleased with what the consumer's reaction. So really, when they are seeing the Fusion Score solution in MyFreedom, what has been the reaction, and have you seen the engagement you originally anticipated when we had those conversations probably about 12 months ago now?
Yes. So we are very pleased with the way customers have responded. We've invested a lot of time in trying to do this properly and phase the release. We had a kind of an early adopter group of 10,000 customers who we released the product to, and then we stepped back and really kind of observed them and bombarded them with questionnaires and formed NPSs for every stage of the journey and what have you, and had research companies telephone them and really make sure that what we were doing was landing well with customers. And as I hope came through in the talk, there are certain groups who were underserved and who we had very much front of mind when we did this. And the heartening thing going forward is the feedback from those groups, and the fact that we've had some lovely comments. There was a lady last week who was very emphatic about the fact that it was lovely to see a product that wasn't judging her for something that happened to her 2 years ago. And that's a verbatim quote. And also in those kind of like Trustpilot reviews that I screenshotted earlier, one chap, hadn't managed to find any loan outside the guarantor space and was able to borrow £10,000 for a car at a single digit APR. I mean, I think that's kind of almost like the mic drop moment for this. It was the fact that he had a large and regular and steady and stable income. And then there was a lender on the other side of the equation who could, that just created the swap set. The guy has disposable income, he saves money, he has a very thin file, but if you met him face to face, you would lend to him. And, I think open banking and the service that we're getting from you guys created that, close that gap. So the more of those we can get, the better.
Yeah, and you know what? It's so amazing to hear, because obviously, I've known each other a while now, and I've constantly spoken about thin file, thin data file doesn't mean thin on transaction data as well. And I really feel that it's at that point now where we are truly starting to deliver that financial inclusion that we set out to achieve sort of all those years ago. So thank you so much, Jake, for taking time out of your day to participate in this, and for sharing such insights and being so candid about what you're doing with Freedom Finance. So thanks very much.
And I'm delighted to say that I've got Jake and Emma with me right now, joining us live. Welcome to both of you. It's great to have you with us. Jake, I was very taken with what you were saying there. I think it's a very interesting, game-changing work that you're doing here. How is consumer confidence or demand being affected by COVID? You did touch on it there, but it was a question that is coming into us. I just wanted to ask it again.
Yeah, no, it's a very good question, a very timely and relevant question. When we set out to do what we have done in developing the Fusion Score, we had a kind of a theory that in the stable economic environment that we were in when we started work, open banking would unlock better offers and conversion and drive growth from that angle. Obviously, nobody could have foreseen COVID, but the unstable environment, such as we find ourselves in now, open banking is proving to be an increasingly common prerequisite for lending. And the big piece of work that we found ourselves engaging in is building kind of custom models, attributes, journeys with a whole host of lenders who are adapting to be able to take in this new data against a backdrop of I wouldn't say the redundancy of credit reference data, but its value has certainly been diminished by payment holidays and the fact that
I think in an environment where there's a very high state of flux, it's very turbulent, as you put it, Emma. It is strangely an opportunity, isn't it?
Yeah, no, it is, and it's an opportunity for customers to get access to the credit they need, and to through the act of sharing, through the act of giving explicit consent, they can find themselves unlocking offers that would otherwise be closed just due to the constraints of the times.
We've got some questions coming in here. We've also got a poll that I want to go through the results of it with you. But there's a question here about, and again, you've touched on this, how willing would you describe customers as being in sharing their data so far?
Well, very broadly, what we've observed is customers fall into two camps. Some people see no benefit, and which is fine. Quite frankly, they perhaps are well served by the current system and can get the products, the services, the outcomes that they need through the traditional way. But for those that do see benefit, it really comes down to trust. And people don't necessarily know something will offer them value if they don't understand it. So there's a big kind of educational piece to nurture people through those journeys, to give them live chat options, click out links to open banking, to other sources of information that get them comfortable with the fact that this is a very legitimate, safe and secure way to share your data and get the products and the outcomes that you need. So, and look, it's an ecosystem. The more people who participate in it, the more common open banking journeys become. The whole kind of tide rises, as it were, and people become more familiar.
Yep. OK, let's take a look at this poll. The poll was what we were asking people. I'm sure you're aware of this anyway, both of you, Jake and Emma. What are you focusing your use of open banking, in 2021? And the answer was overwhelmingly, well, I say overwhelmingly, gosh, it's like the US election once again, isn't it? You've got 41% in favour of affordability of assessments post-forbearance. Affordability assessments post-forbearance, that's 41%. And then just over a third, 35%, say it's origination or customer onboarding. And then 24% say debt management. So what are you making of those results? What do they say to you?
Well, I guess from my side, completely what we would expect to see. I think the one thing, when people have been looking and engaging with open banking over the last couple of years, it has always been with affordability in mind. It's more front of mind than ever, as the fact that you have this real-time data that is available to be able to assess that current situation with the changing climate that we're seeing with people during the pandemic. So I think that's completely what we would expect to see. I think the key in and around that affordability assessment is truly being able to understand and differentiate what is an essential spend versus a discretionary spend and how that is calculated. I think that's very different from where data is, for example, mapped to the standard financial statement when it comes to debt management. And of course, for onboarding of customers, I think the primary use cases have always been income verification and affordability again. But I think organisations are now really starting to recognise the value in the data in terms of looking at it from a creditworthiness perspective.
OK, just briefly then, I also want to talk about intermediaries because they're very important here. First of all, is the key through the intermediary and they're selling the idea to them, if you like, or is it the customer? And also, are intermediaries at the current time focused on too many other things to think about something new? Jake, are you best positioned to answer this? Probably both of you, actually.
Well, we have thought about this, as you just heard about. And, I think our role is to make sure that affordable credit is available to those people who need it, through regulated firms. And, the majority of credit that's distributed in the UK is through intermediaries. And by giving customers tools, such as the one that we've created with AccountScore, to enable them to share data and access regulated firms offering responsibly priced, affordable credit, is a lifeline for some people. And again, the feedback that we're getting from groups who can't get that kind of offer elsewhere, but are managing to access it through open banking is really the raison d'etre of the whole thing. And I think intermediaries will leap on the chance.
Yeah, and I think just to follow up on that, I think that where we've been in open banking for the last 2 to 3 years, initially we needed to get enough lenders on board that were willing to try open banking and start to put it into their journeys. And once we had enough lenders on board, that's when strategically we were able to start working with people such as Jake to say, look, there are definitely lenders that want this, and they're using it on their direct traffic, but the majority of traffic obviously comes from the aggregator intermediary market. So, but the intermediaries this year have certainly, I think, embraced open banking and the opportunity, and it creates a better customer experience when they've already shared their data with the intermediary, and then that can be onward. There can be onward data sharing there as well. So technically, like I spoke about with the tokenization, it's a really nice, a really nice experience for the customer now.
Emma from AccountScore and Jake from Freedom Finance, thanks to both of you. We're going to be talking more about open banking next, this time with Experian and Rob Haslington. He's coming up next, so keep tuned for that.